The thought of completing your self-assessment tax return can probably fill you with dread and anxiety, and especially if you haven't done it before and it's your first time. Well, I'm going to take you through the UK HMRC self-assessment return process step by step, all in under 50 minutes. This video tutorial is pretty much universal and applies to any tax year you may need to complete, as the format and process is largely the same every year. So this tutorial is pretty relevant to you if you are employed through, let's say, PAYE, that's pay as you earn here in the UK, a self-employed business owner. You may receive dividends, whether from a UK or overseas company, receive pensions, again, whether state or private, receive property rental income, interest income, have capital gains or losses from disposals of assets like property, shares, crypto, and much, much more. I also cover foreign income and dividends, UK pensions and state benefits, the high income child benefit charge, and charitable giving. Before I get into this video, there are a few assumptions which I'm going to bring on screen now. So in the interest of saving time, if you just pause the video when the assumptions come up so you can read them carefully. And finally, I want to be clear and transparent with you that this video is actually sponsored by Tax Scouts, who will take out the stress and pain from your self-assessment tax return, certainly a viable alternative to the HMRC process that I'm going to take you through very shortly. And in fact, throughout this video, I'm going to compare and contrast Tax Scouts' process and virtues versus HMRC, so you can actually make an informed decision as to whether you feel it's worth spending £149 to get your tax return done by a qualified professional. Okay, let's get started and stuck in. So here we are now online and on screen, as you can see, and what you need to do first and foremost is sign in using your government gateway. One of the assumptions was that you have a government gateway user ID. So I'm just going to put my details in and sign in. So once you've logged into the government gateway or your government gateway ID, you can see you'll be greeted with a screen which is fairly similar to this. The page will prompt you as to what is outstanding. So here in this case, file a return for the 21-22 tax year ending 5th of April 2022. And also on the right hand side, there's a menu here which you can access. You can view your account. There's certain tax return options which I'll go to in a moment. It'll also give you a summary of your account here. There's 99 pence outstanding due for payment. So in terms of the menu items, there's a couple I just want to quickly show you. If I go into tax return options, I can actually view various tax years. The current year here you can see, and going back in time, and it just gives you a summary of when it needs to be filed by, whether it's been part completed, submitted, etc. And if I go into the view account section, you can see the current position in terms of the monetary payments to and from your account with HMRC, including again by tax year, any surcharges, interest, penalties. Here it just gives you a summary. Got 99 pence due, and if I just click in a little bit further, it'll give us a breakdown in terms of the tax, the interest charged, any subtotals, less any payments for the year. Let's get into the 21-22 tax return, and before you proceed, the system may ask you to confirm details HMRC hold about you. So typically, if you've had employment income and or pension income where tax is deducted at source. So in this particular case, there is some pension income that I need to confirm. So onto the tell us about you section. That's the first section here. These are often auto-completed by HMRC, but it's always worth checking, especially if this is your first time. Any details that don't seem right, and a lot of details are your personal details, so it should be quite straightforward, then do go ahead and correct them where you possibly can. Your UTR here, you can see, is your unique taxpayer reference, and it's displayed. If you don't have a UTR, it should come up here, but if you don't have a UTR, then there is a link in the description box that shows you how to obtain and get yours. Your national insurance number should be put in there, and quite often what I would do is I just put my email address in there for communication and confirmations from HMRC. Is the address shown above correct? Do confirm that, and do check that your taxpayer residency status is correct. It's not just the UK, so it could be English and Northern Irish, Scottish or Welsh. And yes, there are differences as to how tax rates are applied in these different home nations. Then obviously your date of birth, your marital status. And for the bottom 3 options here, I've just clicked no, but again, just do read it. I mean, 1 or 2 of them may apply to you, particularly if you receive notification for student loans. And again, on screen, there's a little bit more detail about when to click yes for these and how it works. Once you're done, press save and continue, goes on to the next section, which is page 103, tailoring your returns. So let's go through these options one by one. First of all, get familiar and understand the tax year in question, which is really important. So for the 21-22 tax year, that spans from the 6th of April 21 to the 5th of April 2022. And then for the 22-23 tax year, it's the 6th of April 2022 to the 5th of April 2023. And then so on, you get my gist. So first off, I'm going to start with the employment section. And if you had a job, i.e. you were employed under PAYE, that is pay as you earn, or you held a directorship of a limited company, for example, very relevant to you contractors and freelancers out there, you'll need to fill in this particular section. Now you're going to click on yes, and you're going to select how many you had. Most common answer is 1, but you could have had more than 1, 2, 3, 4, and obviously just drop down on this box and you can select as many as appropriate. And what you do there, if you select a couple, another box will then appear to create space for your second employment, directorship, and so on. So in this case, I only had 1, and I'm going to actually just name that employer 1. And there you go. I can then go on and fill in that relevant section in due course. Next is page 2 of 3. Did you receive any interest? For example, UK banks, building societies. This is gross or net interest. So I'm going to click yes. It's very common that people do. Did you receive any dividends from UK companies or foreign companies, or any unit trusts or open-ended investment companies? Yes. I'm going to click I did. That's very common. Did you receive any UK pensions? This one, yes. If you remember, HMRC already hold those details about me. So I'm going to click yes. Do your partner have, or if you have one, get child benefit? I'm going to click here yes, just to show you how it works. So was your individual income over 50,000? Yes, you're going to click yes, certainly. If you got child benefit, that's what I'm trying to demonstrate. Whose individual income is higher? I'm going to put my income. And the other options here, you can see, I'm just going to click no, the most common scenario. However, I'm going to leave a few notes on screen just to help you navigate that in case it does relate to you. Okay, on to page 2 of 3. Next up is personal pension retirement annuity. Most of you will have your pension contributions through PAYE, so it's handled automatically. Did you give to charity? I'm going to put in this situation yes, so I can show you how that works. Your spouse or civil partner born before the 6th of April 1935. This is quite a rarity. There are a few of you out there who may need to tick yes, but I'm going to put no. Transferring 10% of your personal allowance to your spouse or civil partner. I'm going to click no in that respect, but it can happen. You get a personal allowance of £12,570 per person every year as things currently stand. So £1,260 of that should be on screen, can be transferred to your partner if you're not utilizing it. Normally, if you're taking a career break or something like that, maternity leave possibly, depends on the situation. And the other options I'm going to click on, I'm going to just click no for them. And again, there's going to be some notes popping up on screen, so you can pause if you want to read them. So once I've pressed on save and continue, I get onto this page here. I've now tailored the return and I'm ready to start filling in each and every section. So stay with me. We're going to go through that next. So before I go on and progress the HMRC self-assessment tax return on that portal, what I'm going to show you in just 60 seconds how the Tax Scouts portal actually works and how to get to the equivalent position, which is setting it all up ready to go through Tax Scouts. So here we go. Okay guys, I'm onto this part of the screen now and set up using the Tax Scouts portal, reason sources, and I'm onto questions. You can see it's highlighted. It's asking now to look at the employment information, and the great feature about Tax Scouts, similar to the HMRC portal, you can connect it to HMRC. So if I just try and connect it, it will open a new screen, and then it's just asking for permission. I continue what you will need, and you need to just sign into your government gateway. Once you sign in, process to then get it connected is actually quite straightforward. Once it is connected, it will then, Tax Scouts will pull in your employment, pension, or any other information that HMRC are holding about you. Very, very good feature. All right, so back on to the HMRC portal screen. Here we go. The first thing we're going to do is fill in our employment details. So I'm going to go in there. Basically, I'm going to whiz through this with a few notes on screen so you get the gist of what to fill in and how. Okay, so there you have it. We've now entered our employment details, fairly straightforward. Again, if your affairs are somewhat more complicated, then it's always worth getting professional advice. And again, this is where using a service like Tax Scouts really does help. And I'm going to come on to that very shortly. Now onto self-employment, and you can see our self-employed one, whatever the title of your business is. Obviously, you put the relevant one in, and we're going to go through all the self-employment details. And just to clarify again, this is self-employment as an individual or a partnership, not if you're operating through a legal entity like a limited company as such. Okay, so we're on this page now, which is self-employed. Did you have an annual turnover of £85,000 or more is the first question. The reason why that is asked is because £85,000 annually is the VAT, the value added tax threshold. If you have exceeded that in a year, you should be registering for VAT if your supplies or goods are taxable. If not, you can click on no. If I click on no, then I got a range of other questions where I have to provide clarification. It could be none of these. Do double check what you are. So for example, if I'm a practicing barrister, I'll just click on that and then I'll move on. Otherwise, in this case, I'm going to click on yes, I did have an annual turnover of £85,000 or more, and save continue. Okay, so I'm jumping in here now. We're at the question as to whether you have a balance sheet. This is optional, and certainly if you're doing the numbers yourself as a self-employed business, then the chances are you may not have a balance sheet. So you can click on no, that's absolutely fine. If you're using an accountant or a professional, then you would have a balance sheet. It is useful, it is recommended, but again, it is optional. So I'm just going to click no in this particular situation. And then this is a really important question. Did you use the cash basis? And again, if you're trying or attempting to do all of this yourself, then I would suggest you go down the cash basis route. It's a lot simpler. It's literally money in and money out, revenue, expenses to get to your profit, and then what's taxable. However, the alternative is the accruals basis. So if your affairs are more complex or you're using a professional like an accountant, chances are you'd go down the accruals basis route. I'm going to click on the cash basis. So I'm going to click on yes, but there are restrictions and criteria. So I would expand on this particular helpline, and there's some notes on screen, a few bullet points on screen to help you determine if you are allowed to use the cash basis. Okay, I'm going to quickly jump back onto the Tax Scouts platform, and as you can see here, I'm going to fill in the employer details in parallel with what we're doing on the HMRC platform. We're on question or section 3, which is questions. I've already filled it in, but I'm going to go need to edit here. I put in the details pretty much exactly the same as on the HMRC platform. It's taken me 20 seconds if that. Click on that button, all looks good, boom, all looks good. That's it, looks good, and it moves on to the self-employment section. So it kind of goes down the menu on the left hand side, as you can see here, similarly to the HMRC platform. And the other advantage is you can see here, you've got an intercom chat function here. I've got Seb who's away, but he's prompted me, what can I help you with? And this intercom chat function is very useful in the sense that it will help you in terms of how to navigate the platform, any general questions about expenses, taxes, and things like that. So you've got on-hand help there. Okay, we're back onto self-employed one, the self-employment section, as you can see, and we're getting to the meat of this particular section where I'm going to fill in all the numbers, the details of revenue, i.e. turnover, income, expenses, and so on. And what I'm going to do is a lot of this is going to be sped through because it's quite self-explanatory in terms of filling in your numbers, but I'm going to also then put notes on screen and jump in where necessary to explain some of the more complex aspects. Okay, I'm jumping back in here now because we've got to the stage where I've got an adjusted profit or loss before any set-offs. That is my turnover minus all the expenses that I've put in. It's at that level there, 48,250. As you can see, we're not yet finished because this is all about, or this question's about your basis period. Now, your basis period is like an accounting adjustment, if you like, and it's normally more prominent in your first year of trading and so forth. So it's an area I don't have enough time to really explain right now. So if you're in doubt, just leave it blank. And obviously, if you are using a professional like an accountant, you can get an explanation from them. They will help you with this. A few notes are up on screen to help you understand basis period. And same with this one. If your basis period is not the same as your accounting period, please enter the adjustment. Now, in order to know what the adjustment is, you've got to do a proper calculation behind it. Okay. And again, I don't have the particular capacity in this particular video to go through it. But again, if you're in doubt, just leave it blank for now. So we're nearing the end in terms of the self-assessment section here. Overlap relief here is linked to your basis period. Leave it blank again if you're in doubt, please, unless you're using a professional. And then we've got our adjusted profit here. And then we come onto the losses section, as you can quite clearly see. If there are some previous year losses, prior year losses that you have banked and registered, then you can actually bring them forward and offset it against these profits. And that will eventually mean you reduce the amount of taxable profit there. So in this scenario, I'm just going to assume we've got none to carry forward. If you have, you can just enter it in that box if you know the amount. And if I want to move on, then if there were losses for this current year, i.e. the 21-22 year, then you can actually set them off against your other income, i.e. if you have employment income, as we do, for example. Again, we don't because we know we've made a profit here of this particular year. And then you can have carry back losses, but you only do that in special circumstances. And normally the default would be to register those losses and allow them to be carried forward against future year profits, and you'd fill it in this box here. Okay, now we're wrapping up the self-employment section, and it's going to ask you whether you are exempt from paying class 4 national insurance contributions. Class 4 obviously is attributable to self-employed people as well as class 2. There is an exemption if you satisfy one of these criteria, as you can see, because we had pension income for this particular return. I'm going to click yes. However, if you don't, none of these do apply, you will be subject to class 4 national insurance contributions. Okay, back with Tax Scouts. I'm going to whiz through the self-employment section here and fill in pretty much the exact details as we've just done for the HMRC portal here on Tax Scouts. So let's speed through this so I can show you how this works as well. And there you have it. The self-employment section is completed very swiftly, very easy indeed. And the one thing I really want to point out with such a platform as Tax Scouts here is that once we get to that stage, this stage here, section 4, you'd be assigned an accountant because you're paying for this service. And then what happens here, if I go and click down on this menu item, you go to messages, you can actually send messages, and obviously from the accountant as well, they'll send you messages, which includes questions, the in-depth questions, the technical stuff, where, you know, when I was going through the HMRC portal, when it comes to things like the basis period overlap relief, disallowable expenses, and so on, and there's a whole list right next to me on screen now, that is what they're there for. That's where they're going to add value. And certainly when you're doing your self-assessment on your own, this is from experience, a lot of the time, a lot of this stuff is skipped over because it's not understood. And therefore, you know, you could be actually leaving on the table a lot of tax saving, or in the worst case scenario, you know, making inadvertent errors, which you didn't intend to do, in which case, you know, an accountant, a trained professional can certainly help you. Okay, next up is the property section, the UK property and other property section. I'm going to click on here and start to fill in some of the details. Rent a room relief. No, I'm not going to cover it in this particular video. How many properties do you rent out? I'm just going to assume 2 at the moment, and it's not let jointly. Do that solely, and the other options are no, they're quite self-explanatory. Now, the one thing I would suggest with property income is do what I've done here, and I've just kept a nice little neat spreadsheet of all the main sort of income coming in by month, the mortgage interest that's being paid, and don't forget, it should only be the interest element and not the principal. So if you're on a repayment mortgage, you're going to have to split the 2 out. Any service charges or other kind of allowable expenses, that is wear and tear allowance, doesn't exist anymore, can't claim that. By the end of it, here, I have a nice total, which I can just kind of lift up the numbers and put into the HMRC return. So I'm going to do that now. I'm going to take those numbers and I'm going to put them in this return. We're going to whiz through this at double speed, so it's quicker for you. If you need to go back, just rewind back the video or pause. That's now done on the HMRC portal. I'm going to flip over to Tax Scouts very quickly, the property rental income section, and I have just filled in the details which mirror that on the HMRC portal, including the number of properties, the income amount, were there any expenses? Yes. And the great thing is you've got some, what is this kind of guidance? It's really good. Did you have a mortgage? And then it asks you interest only repayment. And the great thing about this particular platform, if you're not sure, great, you can just click on not sure, because then when you do engage with your accountant, they'll actually help you clarify this and push it through if you're not sure. That's a big advantage between this and the HMRC portal. So we know it's interest only. And then from here on, I'm going to fill in the rest of this section. Next up is foreign income details, and this is quite common when you're receiving, let's say, for example, a dividend from overseas, an offshore company or an overseas company. You have to declare it here, and certainly that's only if you're not claiming what's called the remittance basis, then you can't use this at all. And remittance basis is normally only done by non-domiciliary or non-doms from the UK perspective. So I'm just going to click here, self-explanatory question, no, and then continue on with that. It could be a number of things: interest, other income, dividends, remitted foreign savings income, etc. It's got to be income that is potentially taxable. So I'm just going to go for dividend from foreign income, from foreign companies, my apologies. And then you can see there's a whole host of other things. If you have received that, there's another one, income from land and property abroad, then you'll need to make that declaration here. And then I'm just going to go ahead and I'm going to whiz through this and fill this all out. So on to the next section, which is the capital gains tax section. We'll fill it in here. Now, the question here is, did you dispose of chargeable assets worth more than £49,200? The deal here is at least in the 21-22 and 22-23 years. Beyond that, from April 2023 onwards, the capital gains tax allowance here in the UK is being slashed to £6,000 per the latest autumn statement. That happened in November 2022, but at the moment it's still £12,300. So if you made gains, I'm not talking about just overall sort of proceeds, we're talking about gains below £12,300 and the proceeds were also below £49,200, then you don't have to fill in this section. However, if your gains exceeded £12,300, you have to fill in this section. Or if your gains were below £12,300 but your proceeds above £49,200, then you've got to fill in this section. There's a summary right next to me on screen as to how this works. So I'm going to click on yes and I'm going to continue. And then what I'll do is, again, I'm going to whiz through this with some notes on the screen. Right, so now we get here on the capital gains tax section, as you can see on screen, and there's a list of common capital assets which you will need to tick. So if you've made a disposal, that is if you've sold of a capital asset that fits under one of these categories and made a gain over and above the 12,300 annual allowance, or if you're watching this in 2023, 24 year and beyond, it will be a lot lower. It'll be 6,000 by then, and then eventually 3,000. Then you need to tick one of these boxes. The most common really is residential property and carried interest. Don't worry about carried interest unless you are a venture capitalist. Residential property is by far the most popular and obviously the most lucrative, I can say, in terms of the size of numbers that I've seen in my career and experience. So therefore you'll tick that. Other property assets and gains, that will include everything else that's not listed there. And quite importantly, of recent, it will include crypto assets. So whether it's your Bitcoin, Ethereum, whatever it may be, NFTs will all fit into that particular category. Then you got your listed and unlisted shares, and then you've got another category here. So I have disposed of, I'm going to go through other property assets and gains, but the principle is pretty much the same for all of them. So you'll see here on screen is a pro forma that I'll need to fill in. It's quite self-explanatory, but I'm going to go and fill it in for my crypto disposals. I've disposed of some Bitcoin, so I'm going to show you which kind of boxes to go and fill in for the most common items. I'm going to whiz through this. Now, when you get to this particular section of the capital gains tax section, and that is to select any files or upload any supporting files to evidence your numbers, then I would strongly suggest that you do use this where possible. So if you dispose of residential property, and certainly in this case, crypto, then you can choose a file and you can actually upload it and give it a bit of description to give that backup. And this really does stop any kind of further compliance or investigative steps or inquiries more often happening from HMRC, especially when the numbers are somewhat larger. So for crypto, what you can do if you're using a piece of software, Coinly, for example, then you can download a crypto tax report, PDF version or something like that, and then you can just easily upload it. So I would strongly suggest you use this where possible. And the other great feature that TaxScouts has is it's integrated with the crypto tax software calculator, Coinly. If you selected crypto on your self-assessment return, this feature will automatically appear, and it will allow you to download a Coinly tax report absolutely free if you have less than 1,000 transactions. And if you have more than 1,000 transactions, you'll get significant discounts from the headline prices. So next we're on to UK interest, and this is a very, very simple section indeed. When I go on it, there's taxed UK interest, that's the net amount, or there'll be untaxed, which has not been taxed, which is a gross amount. So you just got to decide which is which. The most common type of interest is bank and building society interest, and that is normally paid gross. So therefore you'd have to fill in the untaxed UK interest box. The next section is the dividend section, and the most common type of dividend that most people in the UK will receive are dividends from UK companies. And I've just gone ahead and I've filled it in, as you can see there in that particular box, but there are other dividends, and if you've received those, just put it into the relevant boxes, especially if you've got dividends from authorized unit trusts. If you've got dividends from foreign dividends, for example, you can also complete them in these two respective boxes, but it's as simple as that for dividends. Okay, on to the UK pension and other state benefits page here. Let's scroll down. If I was entitled, or you're entitled to a state pension, you'd enter the amount there. Normally HMRC know this information. In fact, they do know this information. So if you did receive one, the number would be auto-completed there. Let's go on to the next section. We're not really going to do much here because unless you've received a state pension lump sum and any tax taken off that pension lump sum, and that's normally upon retirement, then you'd fill in the details here. And you can see here the original data that HMRC held about this particular self-assessment return. The numbers have already been completed because I confirmed it at the beginning, if you recall. And so it's just really a verification check. If there's any incapacity benefit, job seekers allowance, or any other taxable state pensions and benefits, and I'm putting a list here of taxable state benefits on screen, then you would need to complete them, if not already done so, automatically. Next up is the high income child benefit charge. So I'm just going to fill this in very, very quickly. Let's just assume there was one child. Did you get child benefit for the whole tax year? Let's just say yes, and then we can calculate it. The numbers should be automatic. The total amount of child benefit that you would have got, it's calculated because it's a weekly amount. You can confirm whether this figure is correct or not. I'm just going to say yes, it is. Has it stopped? I'm going to assume it hasn't. And then you can just save that. And there you go. That's all you do with regards to child benefit. Next up is the Charitable Giving page, and you can see there's various bits of information here and quite a few options. But the most common is if you've made charitable donations via gift aid, and let's just say I've made £1,000 there. All I'm going to do is put it into that particular box. If there are any one-off payments, for example, and anything to non-UK charities, you can fill them in the other boxes. But anyway, that's the most common one, and I'm going to save and continue. And there we have it. Okay, so we're nearly completed with our self-assessment return. We're on the final few questions, and it starts from here. Any underpaid tax included in the PAYE coding? Normally, these figures are presented on your return by HMRC. It's a 0, so I'm just going to confirm, yes, 0, I'm happy with that. In most cases, you'll have the same 0 here again. And obviously, if there is a number in there, then you can actually confirm it again if it is yes, or if it is a no, you'll have a chance to put in what you feel is the correct number or give an explanation. And then again here with this particular section, if you're in doubt or don't know, just put in 0, save and continue. If you want to claim a repayment, so if there is a tax rebate that comes out of this at the end of it, you'll have to wait 72 hours after you've submitted it before then you can take these next 3 steps. So do bear that in mind. And if you have not paid enough tax, i.e. if there's tax due, in other words, again, in most cases, that's what's going to happen, then basically you have 2 choices for the tax year in question. This is the 21-22 year. Then if it is below £3,000, I can select that I want to use my PAYE code if I am employed, and I have a PAYE code to collect the tax owed, but it has to be below £3,000. So I'm going to click no, because in a lot of instances it doesn't happen, or it's going to be above £3,000, shall we say. And then if you are likely to owe tax for the current year, this is the current year where the self-assessment is not yet due. It's not going to be due until, so for this particular year, this is ended 5th of April 23. So when the 22-23 tax year, that's not going to be due until 31st of Jan 24. But it's asking if there is likely to be tax due, they can alter your PAYE code now. You can be paying sort of almost advance payments, if you like, called payments on account. And then by the time you get to next year's tax return, well, you'll have already paid quite a bit of tax, so therefore cash flow wise you're kind of just paying in advance and you pay less later on. We then get onto this section, which is adjustments to tax due. In most cases, just leave them blank. They are optional. You can read the blurb there, but leave them blank, especially if you're not sure. Save and continue. It's going to ask if these are provisional figures. Well, really, if you're submitting them, you should be selecting no. Save and continue. Is there any other information that you want to offer? Well, it is useful in some instances where you want to provide further explanations, and that can sometimes prevent a sort of, a first level compliance or inquiry check more than anything else if you do provide additional information. But you don't need to provide too much either. I mean, don't go all out and write an essay or anything like that. Just a few lines will do. And then if you want to add any attachments, you can, just to sort of give supporting evidence. Again, you don't want to labor on this, but anything you feel that's complex, then you can do that. And if you're using the services of an accountant, then quite often this does happen. But I'm going to put no in this instance. And then there you go. I'm on to check your return. So that's what we're going to do next. Okay, so as you can now see on screen, we're on the final section, which is view your calculation. This is the summary section here, and it's telling me for the 2021-22 tax year, which is what the self-assessment has been done for, there's a total tax liability of 39,853.64, which is on screen. Plus I have to pay a payment on account for the following tax year. That's the 22-23 tax year of this amount here. So when you add them both together, the total amount payable is the 58,360.46 due by the 31st of January 2023. And what's more, there's also a second payment on account for the 22-23, which is the following tax year. And this is always going to be the case. That's due by the 31st of July 2023. So the first payment account is due on the 31st of January of 23, the following year. And the second one is then 6 months later. And that's for the same amount as the first payment on account. And basically, when you add those two figures together, you'll get the total on screen, and I'll tell you what this exactly means. Okay, now I'm going to click on this link here, view and print your full calculation. And when I do, it gives me a complete breakdown of all my income and profit that is going to be accessible to tax here. You can see from employment, self-employment, UK land and property, and so on. All the different sections that were filled in are all summarized here now. It sums it up into a total income received amount, and then a total income on which tax is due. So that's the tax assessable amount. And then a section here, how we have worked out your income tax. And then it goes on, this is the complete breakdown of basically a full-on calculation, if you like, split down by pay, pensions, profit, saving interest, dividend from companies, gains on life insurance policies, etc., etc. And it goes on. It's quite a comprehensive calculation here. Just here, the reason why you've got it in different sections is because each different types of income and profit are subject to different thresholds and even rates. So you can see on dividends, the rates are different, but things like dividends, the rate that you pay and the amount that you pay on is determined by your other income first, i.e. what you call your employment income and other ordinary income, which is the first part that gets taxed, and then your savings income, and then your dividend income. And that's how it's tiered up basically. And I'm not going to go through the calculations itself and test it all out and show you how each calculation works. All I can say is you can fully trust HMRC's portal in this respect. I've done so many self-assessment returns and I have never had a problem or issue with the software itself. It is pretty much 100% accurate. You'd expect that because it's from HMRC, so you can fully trust that. But just a few points here. For example, here's the finance costs, which was the finance cost for the property rental. And you can see it's limited to the maximum allowable, which is the basic tax relief. So that calculation is now done automatically. Your tax due on gift aid payments, again, it's calculated automatically there. Your high income child benefit charge. So that's now added back because I'm way above the 50, if not the 60,000 per annum threshold. So if I got that child benefit, literally, they're just going to take it back out through taxation and so on until we get to the total income tax due. So this is the total due on income tax due, which is 37,013. And if you recall, just a few minutes ago, I said there were two payments on account. Your payment on account is 50% per installment, that is, of the total income tax due. That's what it is. So if you divide this figure in two, you'll find that the figure earlier, which is now on screen, is the first payment on account plus the second payment account, which totally makes up this figure. And then moving on, you've got the taxable capital gains, which is calculated separately from income tax. Here's my other gains. And as you can see, that was my crypto assets that I sold and got a gain on. And don't forget, the other gains of 14,200 is after deduction of my annual capital gains tax allowance. So that's a taxable amount, which is now going to be taxed at 20%, which is the higher capital gains tax rate, because actually I am a higher, if not upper, tax rate payer, or should I say in this particular self-assessment. And then you get to the income and capital gains tax due, the total figure of 39,853.64. Okay, so at this stage, I can actually print the full calculation. If I click on this button, it gives me an option to print it to PDF. I'm not going to do that for now. It's a useful thing if you want. Save and continue. I'll go on to payments on account. Payments on account, I've already talked about a little before, but very important. And if you go to this link up here, which is highlighted, it gives you a little bit more of an explanation on what a payment on account is and when you have to pay it. And particularly here, if your self-assessment tax bill is over £1,000, then you do pretty much, or you are obliged to then make a payment on account going forward. Or if you paid more than 80% of the previous year's tax you owed, for example, through your tax code, then you perhaps don't need to make a payment on account. But anyway, there's a good link here, useful, and an example which you can follow, very, very easy example that helps you conceptually understand it. Now, you can make a claim to reduce your next year or your following tax year's payment on account. So if I click yes here, it gives me the option to put in what I think my payment on account should be, and it's got to be linked to what I feel my next year's income and therefore my following year's income tax bill will be. And you're only going to reduce your payment on account if you feel your income's going to be lower and thus the income tax payable is going to be lower. But you've got to make that reasonable estimate. It is down to you to do that. And don't forget, it's only based on the income taxable income, not your capital gains tax. So I've actually clicked on no, and I'm going to save and continue. So it's the payment and accounts that HMRC are expecting me to pay. And then I get to the stage where I can save my return, a black and white HTML copy, or most useful, a color PDF copy. You just got to view the PDF and you can download that and then save and continue from here. I then get to the absolute final stage, which is to submit the return. I've got to make these declarations, which you can see is pretty self-explanatory. Once I tick all of those and click on submit, I'm then prompted to re-enter my government gateway ID and password and then submit again. Once I've done that, it then goes over to HMRC and all done. So another common question that always comes up is how do you actually make payment? So when you're on the declaration page, there is this link called How to Pay. If you just go on it, it opens a new tab and it tells you all the different ways that you can make payment and when you have to actually make the payment. So that's by the 31st of January. The 31st of January following the end of the tax year is always your deadline to submit and then also make the payment, the tax bill plus your first payment on account and the second payment account, as you can see, on the 31st of July of that year as well. And payments, the most popular way now to pay is through your online bank. So if you click on this link, it will give you the bank details as to where you pay it and what references you also need to use, which invariably will be your UTR. That's your unique tax reference. And last but not least, what actually happens if you don't file on time, i.e. by the 31st of January and make your payment? Well, it's quite simple. You'll get a late filing penalty of a standard flat rate £100. If your tax return is up to 3 months late, that gives you to the end of April. And if it goes beyond that, not only will you have to pay the £100, but there are additional charges which you have to estimate. So there is a link here which is highlighted, which you can go on, and then you can click on here, estimate your penalty for self-assessment tax returns more than 3 months late. And trust me, it can really add up. So I would really advise to get this done on time. And finally, I swiftly want to just compare and contrast HMRC's process and portal against tax scouts. And you can see on screen, there's a graphic where I'm rating each. And the first rating I'm going to give is on the user interface and simplicity. I'm going to give HMRC an 8 and tax scouts a 9. Now, some of you may be thinking HMRC an 8. Well, I find it quite simple to use because I've used it hundreds, if not thousands of times, to be quite honest. But for the new user, I can understand you probably rate that a bit lower simply because there are a lot of questions. It's a good thing in one way, but also it can be a hindrance for you. That HMRC go into a lot of detail in terms of the questions, and I guess they need to. Whereas what tax scouts have done is they've simplified things and there's fewer boxes to fill in, and they've also got that magic not sure selection. So if you're unsure, you can click that, and by the time your accountant comes on board, they will help you resolve the not sure part of things. Next up is the time it takes to complete the return. I'm going to give HMRC a 5 and tax scouts an 8. And the reason I'm giving HMRC a 5 is because particularly for those who are first timers, those of you who are first timers or the uninitiated, there are a lot of boxes to fill in and it can be quite confusing as to what you need to fill in and where. And with HMRC, it's a case of you either fill it in or you don't. And in cases where you don't fill it in, you could be losing out on reliefs and inadvertently overpaying your taxes. Whereas with tax scouts, they again have simplified it, fewer boxes. So it takes the navigation and the processing time is a lot quicker. And again, it's that magic I'm not sure button. And if you click on that, at least your accountant can jump in and help you clarify that so you can get through it a lot quicker. Next is dealing with HMRC. I'm going to give HMRC themselves a 6 and tax scouts a full-on 10 here. With HMRC, well, you can actually phone them yourself if you have any points of doubt, clarification, etc. Their guidance is actually very, very good. I think it's excellent, to be quite honest. They've done a lot and really put a lot of effort into that. But the problem with dealing with HMRC, let's say on the phone, can be very, very laborious for a non-accountant. Whereas if you hand this over to tax scouts, which you would with their service, they'll take that over. They will directly deal with HMRC on your behalf, as long as you give them what's called agent authorization, which is quite simple to do. So a full on 10 for them on that one. Next up is tax mitigation and confidence. And I think this is the most important factor. This is perhaps one of the reasons why you would engage with an accountant, because with their skill and expertise, they should be able to, with what they know in terms of reliefs, tax losses, and how it all interacts, be able to reduce your tax bill as far as legally possible. I'm going to give HMRC a 5 and tax scouts a 9 on this one. If you're left to your own devices with the HMRC portal, well, they do enough in terms of give you as much guidance, written guidance within the self-assessment return, and that's very good, but actually it doesn't connect all the dots, trust me. And again, if you don't know what you're doing, you often leave it blank and you leave money on the table. HMRC aren't going to come back and offer that to you, whereas your tax scouts accountant should be doing that definitely, and that should more than cover the fee that you're paying tax scouts for this service. And last but not least is the actual price or the fee for the service itself. I'm going to give HMRC a 10 because it is free to use, no cost to you to actually complete and submit your self-assessment return. And tax scouts, I'm giving a 7. They're charging £149 as of the date of recording this video, and actually you get a further 10% discount if you use my affiliate affiliate link, which is in the description box below, making it £134.10. And it'd be highly appreciated if you did go down this route if you decide to use Tax Scouts, because then that funding can help me grow this channel and continue to add value like this. Tax Scouts fee itself, I think, is very, very reasonable at a 7, because yes, you are going to get accountants that perhaps will do it cheaper, but then also you're going to get accountants that are going to do it for a lot more than this particular fee. It really does depend on the complexity of your return, and that's the beauty of Tax Scouts. Doesn't matter how simple or complex your return is, the fee is the same. It's absolutely a flat fee. So perhaps if your affairs are somewhat simpler, the HMRC route may be viable for you or a better alternative. And then if it is getting more complex where you need the help of an accountant, well, certainly there is no additional charges for that at all. And there you have it. I really hope this video has proved useful and given you some valuable insights and golden nuggets as to how to complete your self-assessment tax return with a bit of confidence, or giving you a viable alternative like Tax Scouts. So here's the deal. One of the most common questions I get is, what if after submitting your self-assessment tax return, HMRC decide to make an inquiry or actually a full-on investigation? And that in itself can be quite a daunting prospect. Well, my answer to that is quite simple. What you want to do is watch this particular video where I present 3 practical steps to help you avoid a HMRC inquiry or tax investigation.